Good morning, everybody. It's April 26th. We're basically through with a third of the year at this point. And, I don't know about you, but I know for myself it's been a frustrating year, especially the last 6, 7 weeks. And that frustration has to do with how this market trades and the inability to get high probability trades anymore. And I don't try to make excuses. I just try to live with whatever the market gives me. But I'm not one who wants to take a lot of risk. I want trades that give me fairly good probabilities as well as good reward to risk. I think that's the holy grail. And so far, I personally haven't been able to find those trades. And I say that despite the fact that, we keep finding this market pushing higher, right? Year to date, if you're looking at the listed issues, not that big a deal, right? 2.5%, 3%, I guess, 1.5 and 3. Russell really didn't go anywhere big, but it's just really the NASDAQ, right? The NASDAQ, the technology stocks, these are the guys that are pushing again, 3.5% or a little over 3% last week. And it's the NASDAQ that's making the run. Had a big earnings on Thursday, big push as a result. But it's just a very few stocks that are making this push. And I still believe, as I've said before, that it's mostly about overseas, not so much about what's happening here. But let's not make excuses. Let's figure out a way to make this work and to make some money, which is really the focus of today's presentation. So, let's dive in here and look at what we got. So if I look at the fundamentals and the technicals, right, it's really about the world of wash and debt. Where are you going to put your money? You got to go out on the risk curve. There is no yield in bonds, etc., right? And that's the reality. Europe moved into consolidation. Hong Kong, and it looks like Hong Kong is also. Shanghai not yet. Let's take a look real quick at those markets. Starting with the big two in Europe, in particular China, the CACs, FCHI, which is the French market, right? In the French market right now, it's just a little consolidation here at the highs. The test on the French market really is a push back into this prior swing point high retest regen. My take is that we'll probably get that, but right now it's holding. But the reason I think we'll get that has to do with the German market. So if we go look at the German market, the German market has already entered into a larger consolidation. And as we talked about last week, and the reason we sold on this bounce, right, was because we had broken that prior swing point high to the downside, right, which said that more than likely, the situation now is not up, but is instead sideways. And so, if it's a sideways consolidation, then you don't want to be holding, stuff you bought up here somewhere. You want to actually try to buy it back down here. So what we're waiting on now is to see whether or not that market really has, this as the consolidation ground, right, with kind of two equidistance, right? So if it can get down into this area, that would actually be the buy. Why? Well, it looks like it's breaking down, but at the same time, that's when the CACs is going to hit its retest regen, and you got to expect it's probably going to hold. Now, if it doesn't, right, you can just assume you're going to come back into this area, and it would be a third leg down. So you have a position already, that we bought up here somewhere. We buy another one down into here, and if we have to, we buy another one down here. And so that's kind of the idea of how to trade that particular market, and the fact that it is in a consolidation mode. Now, if we go over and look at the Asian markets, let's start with Japan. And if we look at Japan now, Japan actually looks to me like it's been doing pretty nice ABCD structures. If I try to draw them out here just quickly, you had one here, right? That kind of fulfilled to there, so that was kind of a nice one. Then you had this one, and this one's not quite done. And I'm not sure if it's going to fulfill or not. It's trying to do a little pullback now into the swing point high. This will be the test here, whether or not this thing actually goes higher or does a retest regen. If it can hold in this area, then you'll get some nested, you'll get two little nested ABCD structures. You'll have one here and the larger one, right? So Japan might be a good trade. And so that's one to be looking at. But Japan right now, you know, thrust up, volume up, pull back, no volume. It's been that way for a while. You know, so Japan actually looks like a pretty decent market to actually try to continue going higher. You know, the star in Asia hasn't been Japan, though. It's been the Shanghai index. And that index has just gone bonkers. And I was looking at this closely and trying to draw an ABCD structure here. There is none. It doesn't start until you get up here. That's the beginning of it, and just a little tiny pullback. Now, if that's really true, I mean, that is an amazing run. You had one pullback on volume. Everything else has been to the upside. And if you look at it on a weekly basis, you know, there you can find the ABCD structure. The thing points to, I believe it was about 5,300 was the number I came up with. And, you know, it's continuing. It's going to try to get up there, I guess. Now, right now, this one is not in a consolidation. The one that has tried to go into consolidation was Hong Kong. And if we look at the Hong Kong market, you know, here you can see consolidation taking place. But look at where they closed that Friday. They're up there testing it again. So I think this week is going to be a key week in Asia in these two markets. Is like, do you get this consolidation or not? And the only way you're going to get it is to see it come back and test this lower level again. If it starts to break out, you know, then Hong Kong, China, you know, Shanghai, and even the Nikkei are probably going to try to press higher. Now, there's some support for that idea if you look at the dollar, because the dollar is having difficulty getting higher and is trying to do an ABCD structure to the downside. So the dollar has this sort of action going on. That's to come down and test that low again, right, and potentially break under it and finally come back to do a retest regen off this prior high. So the dollar is setting up, you know, to come back, or at least it's attempting to come back and retest and then potentially regen. Now, on a longer term basis, this dollar wants to go higher. It's just consolidating. So you're consolidating, coming back in, you know, building out the consolidation. But in the short term, it looks like the dollar, in fact, may try to pull back. So, you know, when I look at these markets continue to be probably the go-to markets near term. And as we get down to the portfolio, I'll talk a lot about the fact that I'm going to try to move into these markets even more so than I have, because it doesn't make sense to stay in the markets we're in right now. And I believe we're banging our head up against the wall here, trying to find trades in an environment that's not giving us good trades. So unlike the past years, you know, the market continues, in my opinion, not to have any good high probability patterns. That's a problem. You know, if we go on here real quickly, I've spent a lot of time to start, so let me kind of scoot a little faster here. You know, the technical positives, you can read about all this, but essentially the NASDAQ, the NDX is trying to break out. That's a big positive, and actually not trying to break out, they did break out. Let me pop those charts up as we're talking. And so here's the NASDAQ. NASDAQ breaks out on Thursday. Yes, that follow through on Friday as a result of the earnings Thursday night. You know, Amazon was up huge. You had Google up, not as good, but up. You had Microsoft up something like 10%, and Starbucks was the other one. And so anyway, breakout, you know, nice consolidation, breakout. And, you know, in the past, these things would just carry, right? and that projection would be, a continuation up to the higher level, the same sort of, you know, top to bottom kind of thing, right? You just project that forward. So that's the NDX, the NASDAQ. The NDX on Friday did the same thing. So the NDX pops over the top, and again, consolidation, breakout. The way these are supposed to work is now you take that consolidation, you just double it, and that's where you should head. And if they do, it's going to be good gains. The problem is we've seen this fail over and over. And if you look closely here at the NDX, for example, the NDX has already finished up its ABCD structure off that low. So what's it probably going to do? Well, more than likely it's going to come right back and test again. So, now if it holds here, then of course it can move higher, and it would have another ABCD structure that would lay out as a result of that. But we don't know if it will, and our history so far this year is that they don't. And so my concern with any of these and all of these stocks is that, in fact, you start chasing a breakout or even buying that retrace. It's been a hard trade this year in the domestic markets. So continuing with the positives, right? The M&A continues. The Comcast did fall apart, but it was really on DOJ. It really wasn't the financing, so that's really not that big a negative. Dollar we already talked about. Negatives is it's a labored move higher. I've talked about this, and this divergence still continues to be out there. If I look at the S&P 500, for example, this one's trying to get over the highs. That top over here, 21.1959, and we closed 21.17. You do the ABCD structure here, you can see this thing projects up to about 21.30, I believe, is about where it goes to. So we'll see if this one can break out. Maybe that NASDAQ NDX stretches a little bit more, this one breaks out, and then we get the pullback here, and then that might be the key test, right? Pull back potentially higher, or pull back, don't hold the bullish retest regen, and then you're back in the range, which has been what we've seen over and over. So that's the way the markets are set up, the technicals. Fundamentals, the central bankers, they're aggressive, and especially, in those countries we outlined. The negatives, economics continue to disappoint. And I don't know if any of you really look at the economics much, but I went through every one of these reports that are coming up this week. And, I could just pick one. Here, let's take the GDP and look at that. And bear with me, let me grab it. And just look at the chart, associated with it here. So here we go. Here's the GDP numbers. So, big move back, down back in 08, 09, as we know, and then it's been stagnant, and it's rolling over again, right? You have the negative quarters to start the year, and then you kind of get it to push up. We're expecting negative quarter again, and then we'll see if it's going to pick up in the second, third quarter. But so far, if you look at durable goods, some of these other things, we're not seeing it pick up. Is it going to pick up or not? I don't know. But if you look at the various reports out here, they're not that good. They're not that good here. They're not that good around the world, for the most part. You keep hearing about slowing growth and everything, and it's real. And so the economics continue to disappoint, especially in the U.S., but most of the world. What I would be watching for this week is, can we break out? We didn't move back into the range last week. NASDAQ propelled us forward. Question is can they continue to push, right? Or do they roll back over and come back into the range? So the key test, technically, is going to be NASDAQ, NDX, and SPX if it breaks out tomorrow. Do they push higher and come back? What you really want, and let me go back to the NASDAQ. What you really want is you want to see, anytime you get a breakout, what you want to see is you want to see the distance between here and wherever it goes before it retraces to be as far as possible, right? Because that makes the probability of this holding much higher. And so if I'm bullish, I want to see the NASDAQ just keep pushing. Pull the SPX to new highs, pull the index with it, right? Potentially pull the Russell. Get everything up higher so that when you finally retrace, the odds of holding is much better, because that high is very narrow. There's not a lot of room. So you can easily break back below it. And so what you really want to see this week, if you're looking at this, is you want to see these things push higher, and then when they finally do come back, whether it's this week or next, that they hold. Big key this week is Apple. Apple's tomorrow. There's such a big weighting in all the indexes now, including the Dow. What they do, if they move, large, up or down, it's going to have a huge effect. So Apple, really the key, that's tomorrow. And then of course the Fed this week is the other key, whatever they do. And then the range trade breakouts, are they going to follow through or not? I've kind of went over the economics already. The earnings are not being bought, nor are they being sold. If you look at it, the 5-year average is a beat on revs of about 58%. This quarter, 47 is what we got. So we're not seeing, the revs are not there. So they're going to have to manufacture these earnings going forward unless the economy really begins to pick up. And right now, that's not being shown. So when you think about from that perspective, what's going to drive this market higher? That's what I've been saying, and it's what I keep saying. I don't see the catalyst. Technically, it's still strong, but what's going to drive it higher? Apple's tomorrow, as we talked about. You got all this data coming out. The big one is, of course, the Fed meeting here, and a lot of data. At the end of the month, so you're going to get PMIs and so forth. So there's going to be a lot of data starting new year, which will be into this week and next week. The bottom line is, for a swing trader, this is about as bad as it gets, because if you think about what do you look at reward to risk, which everybody talks about, but you also look at probability of success. You need to know that whatever position you're trying to take, that probability of succeeding is high. And right now, it's not. These reads are less reliable, and as a result of that, that entire equation gets screwed up. It's hard to put much confidence in what you're doing. So, when I find things get difficult, I try to pull back and look at things from a broader perspective. The domestic and indexes sectors, they're mostly bullish. They're not bearish. If you pop over and look at them, they're almost all bullish, all across the board. So, from that perspective, the market doesn't look bad. I mean, it looks bullish. The short and intermediate term trends are not overextended yet. For example, if I just pull the NASDAQ over, you get a 51 bullish. That means you can go a couple more weeks here. You're only 17 on the intermediate because it reset. We're crazy bullish, extended on the long term, but that's all QE. I mean, QE is pushing this farther and farther than we've ever seen. I shouldn't say we've ever seen, than we usually see, right? We've seen runs before that extend this extremely far. But if I look at, those, and if I pop into even the worst case ones, like for example, if I bring the S&P 500 up and look at it, here you're 51, but you just turned bullish. So you're fresh on the short term, getting extended here, but this can go another 14 bars, which on a weekly is another 3 months. So we don't have anything that's going to stop us from that perspective, right now. It's just not there. Individual stocks, like we've talked about, they're just not producing the desired results. Most stocks are not going up. The majority of the stocks are just kind of hanging. Yeah, they're inching back, they're going up and down, they're all over the place, but they're not really, it's not like it was 2-3 years ago, the last 2 or 3 years. It's just not that's not there, and the divergences are still there, and we're chopping around. For these reasons, I really think what we should be doing is looking internationally. We need to take where they have excessive central bank intervention, and that's China, Japan, and Europe, and where they have raging bull markets going on and currency devaluations taking place. That's where we need to be looking. And so when I move over here to the portfolio, that's really what I'm starting to think. You know, I don't want to sit here and bang my head against the wall trying to make trades out of things that aren't working. I want to go somewhere else where they are. And so even though, you know, this week I fell back into the trap of trying to put on post-earnings trades, for the most part, those aren't working. You know, the CarMax, for example, that's, you know, it's just fading down into the gap. And so if I push over here and take a look at these, you know, in a strong market, this doesn't fade all the way back and close the gap, which is what it's about to do. You know, you just don't see that. You know, KeyBank, we've talked about this before. You don't see this thing break out as it did and then fade right back in again. You know, and on and on. And so, you know, I don't want to be so negative as to suggest that there are no trades. The issue is that you can't tell the probability of success on those trades anymore. And for that reason, I really think we have to start thinking elsewhere. And so if I take and look at, like, you know, Europe as a whole, you know, we should be trying to buy this fade. You know, or that German trade that we're in already, we should be buying that fade, you know, down. If it holds here, then maybe we buy it again. But we want to try to buy it lower and buy the fades. If we look at, you know, if we go over and look at that, what is it, Asher, I think, is the one that one of the members keeps trading, and I've personally traded it myself. And let me grab that chart. You know, we should be trying to find trades in these markets. Now, this one's extremely extended and very hard to trade, but this is the idea, right? That's what we should be thinking about. Or potentially like Hong Kong, EWH. You know, that's not a bad looking trade. You know, that one faded in, coming back up, but, you know, any kind of fade here is not a bad trade. So there's trades that are out there, and on the flip side of that, you know, the other trades are in the currencies. For example, if I look at the FXE, you know, this thing, as it pushes back up, and let me pull it up on the weekly, as it pushes back up into this resistance zone, you know, assuming the dollar does come down and this pushes back up, then we should be trying to short it via a short instrument like the EUO as it pushes back into these areas. You know, those are higher probability trades because on this time frame, just like the dollar, it's a consolidation that's taking place. And more than likely, once it gets back here and consolidates, it's going to pick up steam and go again. And if you just think about it from the macro perspective, is Europe going to stop the QE? Is Japan going to stop the QE? They're not planning to, and I don't see it happening. These feel like crowded trades, and they probably are crowded trades, but at the same time, they are the trades that are out there with the probabilities that suggest it's a high probability, and that's what we need to focus on. So that's where my head is. That's what I'm thinking as I wind down the weekend here after looking at lots and lots of charts and thinking a lot about, you know, what do we got to do to kickstart and get going again. So that's where my focus will be. I will try to sell, you know, for example, if I bring up Facebook, I should try to sell Facebook on any kind of lift. Take the trade, you know, get what little bit we can, reallocate those monies, get them working again, get them working in areas where they actually have a good probability of succeeding for us and making us some money. Okay, with that, I bid you farewell. As always, I'm here. If you need me, give me a holler, and I'll try to help you any way I can. Thanks, and take care.